Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, October the 26th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. A little bit of economic data today in the form of wholesale inventories came in slightly lower than or higher than expected, I should say, at 0.2 versus 0.1%. We also got our flash services PMI. Remember, we got our flash manufacturing PMI earlier on in the week, and it came in a little higher than expected at 54.8, expected 52.4. Services PMI is Purchasing Managers Index for the servicing sector. Then we also got new home sales came in lower than expected at 593,000 units, was expected to be 601,000 units. We also got crude oil inventories, was expected to be a build of 0.7 million barrels, and we got a drawdown of 0.6 million barrels. Now, I've been talking about how I thought a lot of this oil that was going to be coming online, it just isn't really showing up in the numbers. I don't know really what's happening there. We also had rig counts come out, another increase to 530 rigs, I believe it was, an increase of 14 rigs. So we've got a lot of oil service sector type building or infrastructure growth going on, because once it gets above $50 a barrel, those guys really can start being profitable. So we're starting to see a lot of that come back online. It's been ramping up pretty much since February, and we're at a high since February on those rig counts anyway. On that drawdown, crude oil rallied about $1.20. It was trading around $48.87. It was trading right there, trying to test that 61.8 Fibonacci level. And then we rallied to the highs of the day, which was right around, I think it was $50.10. If memory serves me, the high, $50.10. And that all happened in about half an hour. So big rally. And it also caused the overall equities to come off of their lows as well. So oil was on its lows right before that number. As soon as that drawdown came out, the overall broader market for the equities and the crude oil started rallying. Bonds came off. Gold came off as well. So looking at gold here, as you can see, it's down on the day to almost $6, but it is something to note that we have gone back below that 200-day moving average today. Yesterday we got above it. It looked like we were going to be able to try and hold above there, but it's come back off. So happy for me, because I have a strangle on in GDXJ that is working out nicely. Then on into the bonds. Like I said, when crude oil started rallying, equities started rallying, bonds came off their highs. Bonds are back below that 50% Fibonacci level, but I think that this line in the sand is pretty much concurrent with where the point of control is. So that line really is going to be where the market wants to stay along. So because it all coincides, everything's right there. The 200-day moving average, the point of control, and that 50 Fibonacci level is going to be a very comfortable place for the bonds to go for the foreseeable future, until somebody in the Fed really starts stirring the pot. On to the Dow Jones Industrial Average. As you can see, we got a mixed bag here. You'll see we have a mixed bag here in the equities. Bonds the Dow Jones is up 45 points on the day, pushing up against that 50 50-day moving average, which will act as resistance as it has before. And then as you can see with the NASDAQ is the lagger of all of them off of those numbers, but it is near the highs of the day for itself, and it's up 16 points on the day, as you can see here, but testing that point or the value area high, which will also act as a resistance area. Then with the E-mini S&Ps, just down 1 point on the day. Earlier, right before I got ready to go on here, they were actually slightly in positive territory, but we've seen it come off of that just a little bit. As you can see here on the 15-minute chart of the E-mini S&Ps, this is the release of that economic data for the crude oil drawdown, really just blasted higher on the equity side, and pretty much all of the equities look the same, as well as crude oil. But it looks like there's a bit of a profit taking going on right now from that rally, and that's what this pullback is looking like it is all about. On to the trade that I've done. The only thing that I did was going into this number, I was looking at XOP. I had on a put spread in there, and it came down. The low was 26 like 19, I believe it was, and once it came down to that 26, okay, so the 2602 right before the release of that number, it got a little bit lower than I got out, but it started going down there looking like it was going to test that 26 area. I think I got out around when it was trading 26.19. The open was the open was 36.26. When it got down to 36.19, that's where I decided to get out. It was close enough to my lower put, my short put, that I decided to get out of that for a profit and not risk it going into the number. So I had on the November 36, 38 put spread. So I was long the 38 puts, short the 36 puts to define that risk. I originally paid right around 70 cents for it, got out of it for $1.14 this morning on the open, or shortly thereafter the open. So, I had a profit in it. It wasn't making any sense to really go into risking that through the number for what would have been, a few more pennies. So I took that one off. Anyway, that's all I got for you guys today. Friday's webinar is going to be on short straddles, so that'll be a really good one. That's a way to collect a lot of premium, especially in a sideways trending market, which we've seen for the greater part of a lot of different underlyings. So I'm going to go through all the rules of how to set that trade up to increase your probability of profit so that you can be successful in trading. All right, that's all I got for you today. If you can't take that, take it easy.